Good morning, everybody, and welcome to your daily solo 401k webinar and Q&A session with my solo 401k financial, where we help you to stop overpaying taxes and start building real retirement wealth. So today's topic is how to transfer an IRA at Fidelity Investments to a self-directed solo 401k offered by my solo 401k financial, where you can use Fidelity Investments to hold the funds for the self-directed solo 401k offered by my solo 401k financial. That might sound a little confusing, because even though Fidelity Investments offers their own solo 401k plan, which we like to call a basic solo 401k, they will also provide what they refer to as non-prototype investment-only brokerage accounts for a self-directed solo 401k offered by my solo 401k financial. And many of our clients already have IRAs at Fidelity, so they like to use Fidelity Investments for the new brokerage accounts for the solo 401k offered by my solo 401k financial, and then they'll transfer their existing IRAs at Fidelity to the new non-prototype investment-only brokerage accounts for the solo 401k plan offered by my solo 401k financial. So we are going to go over the whole process. As always, please also use today's session to ask questions. So go ahead and type them over regarding questions you might have about today's topic or any other topics surrounding IRAs and solo 401k plans. Make sure to type them over, and we'll pause and answer those questions as they come in. At the moment, I see a few questions here at the moment, so we'll start looking at those here in just a minute. But before we get to that, let's just start going over a few slides here. So of course, before you can even entertain transferring your IRA at Fidelity Investments to a solo 401k plan, you need to make sure you're eligible. The last thing you want to do is open a solo 401k plan and you're not eligible, and then worst of all, transfer that IRA to that solo 401k plan if you're not eligible, which could trigger taxes, or you may have to reverse it. So before you ever open a solo 401k plan, make sure you understand the eligibility requirements. And they're pretty straightforward. As the slide here displays, a solo 401k plan is for an owner-only business. So as long as you are an owner in your business and also an employee in your business, you can open a solo 401k plan. That's number one. Number two, from an eligibility perspective, your business cannot employ any non-owner full-time W-2 employees. Give me just a moment here. So that means that if your business employs a W-2 employee who is not an owner, and if that individual works 1,000 hours or more in your business, then you would not be eligible to open a solo 401k plan. So you can exclude anyone who's working under 1,000 hours when you're looking to open a solo 401k plan for the first time. Also, you can always exclude contractors. So if you hire contractors in your business, it doesn't matter how many hours they work, because you can always exclude a contractor or contractors from a 401k, whether a full-time employer 401k or a solo 401k plan. You can also exclude anyone who's under age 21, regardless if they are a W-2 employee who works 1,000 hours or more. So you can always exclude contractors and those who are under age 21. Of course, don't confuse the contracting or the contractor exclusion, because many individuals are self-employed as contractors. So yes, if you're a contractor, you can open a solo 401k plan. It has nothing to do with the business entity type. It has to do with whether or not you meet these eligibility requirements. So whether you're self-employed business as a sole proprietorship, you're a 1099 contractor, you have a formal entity like an S corporation, an LLC, a C corporation, those are all fine. What matters is the underlying activity. You have to be performing the work, the material services. That's what justifies if you're self-employed, and then also make sure you meet these other eligibility requirements that I just mentioned there. So why roll over an IRA to a solo 401k plan? Well, this strategy is commonly used to eliminate pre-tax IRA balances for backdoor Roth IRA planning. We did a webinar yesterday called the Roth trifecta, when we discussed how you can perform a backdoor Roth IRA. So many of our clients process the mega backdoor Roth solo 401k, and they also process a backdoor Roth IRA. You can actually do both in the same year. So many clients will transfer their gains or their pre-tax funds and IRAs, whether a simple IRA, SIP IRA, traditional IRA, non-deductible IRA, to the solo 401k plan to isolate those non-deductible IRA funds so that they can then process a backdoor Roth IRA. So other reasons that this strategy is commonly used, that is transferring your IRA to the solo 401k, is because you want to consolidate retirement accounts. A solo 401k plan is often used to consolidate retirement accounts. Many of our clients will not only transfer their IRAs to the solo 401k, but they will also transfer their former employer plan, whether a thrift savings plan, a 457B governmental plan, a profit sharing plan, a former employer 401k, also known as a 401A, and so forth. And they also want to transfer their IRA to the solo 401k plan that allows for the mega backdoor Roth strategy. They also want to be able to take a loan from their solo 401k, because when you transfer an IRA to the solo 401k, once those IRA funds are transferred to the solo 401k, they are no longer considered IRA funds. They essentially morph into solo 401k funds. And unlike an IRA, the solo 401k plan rules allow you to take a loan, what's known as a solo 401k participant loan from your retirement solo 401k plan, where you can borrow 50% of your solo 401k balance, not to exceed $50,000. And here at my solo 401k financial, we'll prepare those solo 401k loan documents. And we don't charge additional fees for preparing solo 401k loan documents. And you're also going to maintain full control of your solo 401k without resulting in taxes when you transfer that IRA to the solo 401k. Now, before we go over the next slide, which deals with eligible IRA types, let's take a look at some questions here. So, here's a question. I have been watching your videos over the past few days and have found them very informative. Well, thank you for that feedback. We really appreciate it. We actually go live every day. Oftentimes we go live twice a day. We'll be going live again here in a few hours. Thank you for the knowledge you've shared. I'm particularly interested in the backdoor Roth strategy. That's a very popular topic. We were actually the first in the solo 401k industry to offer the mega backdoor Roth solo 401k, started in 2013. Sorry for too many questions. Based on my understanding from your videos and knowledge base, I would like to confirm the points below before opening an account, which I'm planning to do today. So you have an existing solo 401k at Fidelity. Okay, great. So you have it at Fidelity. We have a lot of clients that actually restate their existing Fidelity solo 401k to a solo 401k plan offered by my solo 401k financial. And I'm going to share a link from our website that explains that process in detail. So give me just a moment here while I dig up that specific link surrounding how to transfer, also known as restate, an existing solo 401k at Fidelity Investments to a solo 401k offered by my solo 401k financial. And you're going to actually have the option to keep your funds at Fidelity Investments. As I mentioned earlier, with the solo 401k offered by my solo 401k financial, Fidelity will provide what they refer to as an investment-only non-prototype brokerage accounts for the solo 401k offered by my solo 401k financial, and then we'll help you pick up that existing solo 401k plan, including all securities, and move those internally to the new solo 401k offered by my solo 401k financial, so that the funds never leave Fidelity Investments, and that's not going to be taxable nor reportable, because you're not shutting down your solo 401k plan. Instead, you're changing solo 401k providers. In this example, you would be changing from a solo 401k offered by Fidelity Investments to a solo 401k plan offered by my solo 401k financial. And let me see if I can pull up that link here. And when you name that new solo 401k offered by my solo 401k financial, you could name it after the name of your business. Let's say the name of your business is LL Street. You could call it LL Street Trust, for example. So take a look at this link here that I just shared there regarding how to restate, change from a Fidelity solo 401k plan to a solo 401k plan offered by my solo 401k financial. But let's continue looking at your questions here. So you have an existing solo 401k at Fidelity. Your understanding is that we will amend the existing solo 401k plan. That's exactly right. It'll get amended to a solo 401k plan offered by my solo 401k financial. Keep my current stocks, ETFs. That's exactly right. You're not going to have to liquidate any of your securities. So those will get, and we'll prepare the applicable Fidelity internal transfer form to move that Fidelity solo 401k internally to the new brokerage accounts for the solo 401k offered by my solo 401k financial, so that the funds are now held at Fidelity. And we'll assist through this whole setup. So I think that takes care of your questions there. But again, take a look at the link that I just shared here. There's that link there, which details the process in full. Now, when you complete our online application, you're going to want to list the original plan effective date of that existing solo 401k at Fidelity. That's one of the questions that we ask. You can ascertain that date by reviewing your Fidelity Investments adoption agreement, which is the adoption agreement for the solo 401k offered by Fidelity. An adoption agreement is a standard document that applies to all 401k plans, whether a solo 401k or a full-time employer 401k. If you look at that adoption agreement, there is a section titled Original Plan Effective Date. You're going to want to enter that date on our online application so that we can make sure we populate that date on the restated solo 401k plan documents that we will draft. So that way the plan maintains its history. And then we'll draft those plan documents, send you a download link, you sign them, then we shepherd you through opening up the new Fidelity Investments non-prototype brokerage accounts for the solo 401k that we offer. It typically takes Fidelity 5 to 7 business days to open those brokerage accounts. It just depends how busy they are. Fidelity Investments will send you an email when those brokerage accounts have been opened. And we will provide you instructions on how to nickname those brokerage accounts. And I'm saying brokerage accounts because The solo 401k plan offered by my solo 401k financial also allows for voluntary after-tax solo 401k contributions, Roth solo 401k contributions, pre-tax solo 401k contributions. So here's an example here. We would help you to open up a total of 3 brokerage accounts for your solo 401k plan offered by my solo 401k financial over at Fidelity. And keep in mind, we can do this setup at any brokerage firm. That's why many of our clients utilize our services, because unlike other solo 401k plan providers, we let you choose where to hold the funds at. It's your funds, it's your retirement account. So we let you choose where to hold the funds at, and we'll assist you in opening up those holding accounts. So since your particular question deals with Fidelity Investments, the solo 401k plan, so it's just one plan sponsored by your self-employed business, will help you to open up 3 separate, what's referred to as holding accounts, aka brokerage accounts under the solo 401k plan, because you are required to separately track your pre-tax funds, your Roth funds, and your voluntary after-tax funds within the plan. So it's considered just one plan. The plan is sponsored by the self-employed business. You are a participant in the plan. The 3 separate brokerage accounts will be labeled accordingly. The first one will be labeled pre-tax, the second one Roth, and the third one voluntary after-tax, so you know which one is which, because when you transfer your existing Fidelity solo 401k plan to the solo 401k offered by my solo 401k financial, if that plan holds pre-tax as well as Roth funds, those need to be moved over to the applicable pre-tax and Roth solo 401k brokerage accounts under the new restated plan offered by my solo 401k financial. And then you can make voluntary after-tax solo 401k contributions and convert those to the Roth solo 401k plan. We'll take care of the Form 1099-R reporting for that mega backdoor Roth conversion. And we collect that information by having you complete our online after-tax conversion form on our website, found under the Forms tab of our website. And so you'll complete that online form once you've moved the funds from the voluntary after-tax solo 401k funds to the Roth solo 401k. And then we'll issue that Form 1099-R to report that non-taxable conversion, because it's all going to be after-tax funds. There might be some small gains. That's why you want to convert those voluntary after-tax funds immediately to the Roth solo 401k. So if there are any small gains that get converted to that Roth solo 401k, only the small gains will be taxable, but not the basis, because those would have been made with after-tax funds. We can also do that if it's a 2-participant plan. Let's say both spouses are self-employed in the same business. Here's an example of 6 holding accounts at Fidelity Investments for the new solo 401k offered by my solo 401k financial. So each spouse is required to have their own separate participant account, as well as holding accounts, also known as participant accounts, to hold those various sources of funds, pre-tax Roth and voluntary after-tax for each spouse. Okay, so let's go back here to our slide presentation. So again, today's topic is how to transfer your IRA at Fidelity Investments to your self-directed solo 401k brokerage accounts, known as investment-only non-prototype brokerage accounts, for a solo 401k offered by my solo 401k financial and held at Fidelity Investments. We're also answering your questions here live on the air. Go ahead and continue to type those questions, and we'll get to those questions as we go through our slides here. Looks like we have another follow-up questions here. Let's see here. So mega backdoor Roth for 2025 for an S-Corp business. I understand I can still fund the mega backdoor for tax year 2025. That's exactly right. As long as I have sufficient W-2 salary from the business. You're exactly right. We actually have been covering that topic for the last couple weeks, So I know you've mentioned you've been listening to our webinars, so I'm glad that you've had a chance to tune in. But yes, from a voluntary after-tax solo 401k side of things, it's not too late to open a solo 401k plan here in 2026 so that you can make tax year 2025 contributions. And we have a lot of slides pertaining to each entity type, but since your business is an S corporation, here are some good slides. So with an S corporation, those that have not yet opened a solo 401k plan, they actually have time to open a solo 401k plan here in 2026 so that they can make tax year 2025 voluntary after-tax solo 401k contributions. You can also make employer profit sharing contributions here in 2026 for tax year 2025. As long as you open that solo 401k plan by March 15 of 2026, you're going to be able to make voluntary after-tax solo 401k contributions as well as employer profit sharing solo 401k contributions for tax year 2025 based on your 2025 self-employment W-2 wages from your self-employed business. If you file for an 1120S business tax return extension, you're going to have an extra 6 months. You're going to be able to open that solo 401k plan here in 2026 by September 15, and you're going to be able to make the contributions. That's voluntary after-tax solo 401k contributions and employer profit sharing contributions for tax year 2025 by September 15 of 2026, as long as you open that solo 401k plan and fund it by September 15 of 2026. So you're exactly right. Okay. Let's go back here. Again, pardon me, I've been battling the flu for the last 3 weeks, actually, and I'm just finally turning the corner on that, but I'm still a little bit under the weather here, so pardon my etiquette here. Let's go over a couple more slides and then we'll go ahead and take a look at some more questions. But again, go ahead and continue to type your questions over and we'll go over those. So we already talked about why roll an IRA into a solo 401k. Let's talk about eligible IRA types. So most pre-tax IRAs can be transferred into a solo 401k. Those include traditional IRAs, rollover IRAs, which are IRA funds consisting of funds that were rolled over from a prior employer plan to that IRA, hence why it's called a rollover IRA. It's still technically a traditional IRA, but in the industry, you'll often hear the words rollover IRAs. You can also transfer SEP IRAs. You can also transfer simple IRAs. Typically, you have to wait 2 years before that simple IRA can be transferred, meaning that you have to make sure that you've had that simple IRA for 2 years before it can be transferred. That's known as the 2-year participation rule. Now, of course, Roth IRAs are not eligible for rollover into a solo 401k plan. I know that a couple of congressmen this year have put together a bill proposal to allow for the transfer of Roth IRAs to the Roth solo 401k plan. Other congressmen have proposed bills in the past, and unfortunately has never come to fruition, but maybe it finally will. Maybe under Secure Act 3.0, it'll be allowed, but as the regulations currently stand, and it's actually a Roth IRA regulation, it's not a solo 401k regulation, so you can never transfer a Roth IRA to a solo 401k. You can do it directly or indirectly. Some clients understandably try to get creative and they'll take a distribution from their Roth IRA and then they'll deposit it to the Roth Solo 401k. That's not allowed either. Also, if you have a non-deductible IRA, however, you can transfer the gains in that non-deductible IRA to the Solo 401k plan, to the pre-tax Solo 401k plan, and then you can convert the non-deductible IRA basis to the Roth IRA. That's known as the backdoor Roth IRA strategy. But you can never transfer the gains, you can never transfer the basis in a non-deductible IRA to the Solo 401k, but you can certainly transfer the gains in that non-deductible IRA to the pre-tax Solo 401k. But don't confuse that with the Roth IRA. A Roth IRA, whether principal or gains, can never be transferred to a Solo 401k, at least under the current regulations. So the rollover of IRAs is permitted to the Solo 401k. So traditional IRAs, simple IRAs after the 2-year period, SEP IRAs, those are allowed to be transferred to the Solo 401k because the rollover is permitted because the IRS allows tax-deferred IRA funds to be moved from an IRA into a qualified plan, and a Solo 401k plan, just like a full-time employer 401k, is a qualified plan. Okay, let's take a look at some questions here before we go over the next slide. Let's see here. Give me a moment here. So here's a question. I currently have an LLC. Are you able to help me file for an LLC tax as an S Corp? So if you have an LLC, we can certainly help you to open a Solo 401k plan, because a Solo 401k plan can be sponsored by any type of self-employed business. We have a small book of clients who are farmers, and they file a Schedule F. And because they're doing self-employment activity through farming, they open a Solo 401k plan. Many of our clients have LLCs that are taxed as an S corporation or a sole proprietorship or partnership, and they perform self-employment activity under that LLC. So that LLC would sponsor the Solo 401k plan. You just need to make sure that that LLC doesn't employ any non-owner full-time W-2 employees who work 1,000 hours or more. And then you would be eligible for a Solo 401k plan, and we offer Solo 401k plans, hence the name My Solo 401k Financial. Okay. Here's a question. Fidelity non-prototype accounts hold assets for My Solo 401k Financial. That's exactly right. Fidelity Investments offers their own Solo 401k plan, but they also provide what they refer to as investment-only non-prototype brokerage accounts for a self-directed Solo 401k offered by My Solo 401k Financial that allows for all the different strategies, such as the Mega Backdoor Roth Solo 401k strategy, employer Roth Solo 401k contributions, in-plan conversions, Solo 401k participant loans, self-directed investing into not only equities like stocks, index funds, exchange traded funds, but also private equity, hedge funds, cryptocurrency, physical real estate, whether commercial or residential, trust deeds, so promissory notes secured by real estate, tax liens, precious metals. I know that gold and silver have been hitting all-time record highs. So many of our clients explore investing in alternative investments like precious metals as well. Let's see here if we have some more questions here. Here's a question. Fidelity non-prototype investment only, can they be managed by Fidelity advisors? They certainly can. We actually, our main book of business is on the institutional side. We have a lot of institutional advisors that utilize our Solo 401k services for their Solo 401k clients. We actually have a lot of Fidelity institutional advisors, registered investment advisors that utilize our solo 401k for their clients, and we'll draft the Fidelity institutional non-prototype brokerage forms for the advisor, and he or she will submit them to their back channel to Fidelity Investments. We can do the same thing at Altruist, same thing at Charles Schwab, all on the institutional side. We also work with a lot of LPL advisors, Edward Jones advisors. So we're kind of going full circle here. Here's my solo 401k financial. We're solo 401k plan providers and compliance providers. That's why we have so many clients, is because the advisors, or on the retail side, the individuals get to choose where to hold the funds at. And we're here being the plan provider and handling the compliance reporting. So certainly, that's the majority of our businesses on the institutional side. Here's a question here. I already have a solo 401k. Is it possible to amend how my LLC is taxed? Certainly. Go ahead and submit a support ticket through our, if you go to the forms tab of our website there, you scroll down, you can submit a support ticket and we can go ahead and amend that solo 401k plan. No problem at all. Okay, I think we've gone through all those questions. Again, continue to type your questions and we'll go ahead and pause and answer those questions as they come in. In the meantime, let's continue with our topic for today. So, opening the correct brokerage accounts for the solo 401k at Fidelity Investments. So, again, unlike Fidelity's, what we like to call basic solo 401k, the solo 401k offered by my solo 401k financial allows you to open non-prototype investment only brokerage accounts at Fidelity Investments. So you get the best of both worlds. And this is critical because it enables voluntary after-tax solo 401k contributions, mega backdoor Roth conversions, checkbook control through the solo 401k plan, meaning you can actually invest in promissory notes, real estate, so physical properties, whether commercial or residential, through that solo 401k. Many of our clients will use Fidelity Investments for the brokerage accounts, and they're able to wire funds out of that Fidelity brokerage account for the solo 401k offered by my solo 401k financial for investing in rental properties. So yes, and that's allowed because Fidelity Investments is not providing the solo 401k. My solo 401k financial is. So Fidelity Investments will gladly hold on to the funds because they actually make money off of your deposits. But they understand that my solo 401k financial is the plan provider, the one providing the compliance support and assisting you with the IRS required reporting. So it also allows you to have multiple holding accounts under the solo 401k plan offered by my solo 401k financial through Fidelity Investments non-prototype brokerage accounts. So as I mentioned earlier, you're going to have separate brokerage accounts to hold your pre-tax solo 401k funds, your Roth solo 401k funds, and your voluntary after-tax solo 401k funds. So my solo 401k financial guides will actually guide you through the entire solo 401k establishment plan process. We'll make sure that the proper Fidelity investment only non-prototype brokerage accounts are open. We'll show you how to nickname those brokerage accounts so that you know which one is Roth, which one is pre-tax, and which one is voluntary after-tax. Okay, let's see here. Let's take a look at some more. Let's see if we have any more questions here. And then we'll go over the next slide here. So here's a question here. Form 5500 easy filing for 2025 will be my first year required. As the plan balance has crossed 250,000 threshold, Can you assist with filing the 2025 Form 5500 Easy for the existing plan? Or do you only handle filing starting in 2026? Good question. You would need to file that Form 5500 Easy through Fidelity Investments because you have a solo 401k with Fidelity Investments. But if you transfer that Fidelity Investments solo 401k to my solo 401k financial, then going forward, starting with 2026 Form 5500 Easy, which would be due by July 31st of 2027, we would both prepare that Form 5500 Easy and file it with the government. So if you don't have a solo 401k plan with my solo 401k financial, then we're not going to do work for a plan that is not with us. So if you're opening a solo 401k plan with my solo 401k financial for the first time in 2026, then we'll gladly prepare that Form 5500 Easy going forward, starting with the year 2026 Form 5500 Easy, which would be due to the government by July 31st of 2027. Okay, let's see here. If we have, I don't see any other questions at the moment. So let's keep going through our slides here. Let's talk about the Fidelity IRA rollover form. So again, today's topic is how to transfer an IRA at Fidelity Investments to a self-directed solo 401k offered by my solo 401k financial, where you also use Fidelity Investments to hold the self-directed solo 401k plan funds for the plan offered by my solo 401k financial inside what Fidelity refers to as investment-only non-prototype brokerage accounts. So even though Fidelity offers their own solo 401k plan, which I like to call the basic free solo 401k, they will also provide investment-only non-prototype brokerage accounts for a solo 401k offered by my solo 401k financial that's fully drafted for maximum flexibility under the IRS regulations. So to move the IRA at Fidelity Investments into the solo 401k non-prototype brokerage accounts also held at Fidelity Investments, Fidelity requires their plan rollover request form. They actually refer to it as a one-time withdrawal form, which I don't like that title, but that's how Fidelity likes to refer to their form. So don't get confused by that title of one-time withdrawal IRA. So you're not taking a distribution, you're not withdrawing IRA funds, but instead you're transferring that IRA at Fidelity Investments, including any securities like stocks, mutual funds, and so forth, internally and in kind to the new Fidelity investment-only non-prototype brokerage accounts for the self-directed solo 401k offered by my solo 401k financial. So we're going to help you, obviously, to transfer that Fidelity Investments traditional IRA or SEP IRA, for example, to the solo 401k offered by my solo 401k financial, also held at Fidelity Investments. So the way my solo 401k financial will help is that we'll actually prepare that one-time Fidelity Investments IRA withdrawal form. So we'll actually prepare it for you. So this is going to ensure that your solo 401k is listed on that IRA one-time withdrawal form. And we're going to make sure that we check off the appropriate box that tells Fidelity that this is a non-taxable direct rollover. We're also going to list the name of your solo 401k with my solo 401k financial on that form. We're going to check off the box that's going to say do not liquidate your investments, but rather transfer those in kind to the new brokerage accounts at Fidelity Investments for the solo 401k offered by my solo 401k financial. That way the funds in your IRA never leave Fidelity Investments. And we never have access to your funds. We do not need to have access to your funds in order to help you process this transfer as well as assist with the ongoing compliance reporting. We'll collect the necessary information from you directly in order to do that. And then with regards to the submission process, once we've filled out that one-time withdrawal IRA form, which is how Fidelity refers to it, the submission process works as follows. You're going to sign that one-time withdrawal IRA form, and you're going to go ahead and submit it directly to Fidelity Investments. So Fidelity Investments is not going to send out a check, because again, the funds from that IRA are going to be moved over internally to the new brokerage accounts for the solo 401k offered by my solo 401k financial. So this structure keeps the transaction fully compliant, and it's not reportable as income, because you're not taking a distribution. Instead, you're picking up and moving your existing IRA at Fidelity and transferring it in kind, including the securities, to the non-prototype investment-only brokerage accounts for the solo 401k offered by my solo 401k financial. Okay, let's see if we have any other questions here, and then we'll go over our next slide. Let's see here. I don't see any other questions at the moment. So let's keep going over our slides here, and then we'll keep monitoring the chat for questions. Now, if this information is helping you feel confident about your solo 401k retirement needs, we would really appreciate it if you took just a moment to like and subscribe. It tells the platform that this information is valuable, and it helps us to get the word out to other solopreneurs like you so that they can find this good information. And also, if you subscribe, it guarantees that you receive notifications of all the crucial content that we deliver every day to help you secure your retirement future. So I don't see any other questions at the moment. Let's talk about an in-kind asset transfer. And we've kind of touched on this already, but it doesn't hurt to keep going over it. So one of the biggest advantages of doing this transfer, that is transferring your IRA within Fidelity into your new investment-only non-prototype brokerage accounts for the solo 401k offered by my solo 401k financial, is that you don't have to sell any of your stocks or mutual funds. So what does in-kind mean? Well, in-kind means that you do not liquidate your stocks, ETFs, and mutual funds. Instead, they get moved over as is. So whatever price, whatever the unit value or the value of that stock is at the time of the in-kind transfer. So there's no forced liquidation. So the IRA custodian can never force you to liquidate your positions. So there won't be any time out of the market. So that's good to know in case that those investments go up. And it doesn't trigger any type of capital gains or losses because nothing is being liquidated. So because the IRA and solo 401ks are both held at Fidelity Investments, the assets simply move from your IRA to the new Fidelity investment only non-prototype brokerage accounts for the solo 401k offered by my solo 401k financial, which is a qualified plan. So the funds never leave Fidelity. They are re-registered under the new non-prototype brokerage accounts for the solo 401k offered by my solo 401k financial. Let's talk about tax reporting. So the movement of an IRA held at Fidelity Investments to a solo 401k investment-only non-prototype brokerage account at Fidelity Investments is treated as a direct rollover. So it's not treated as a distribution, it's treated as a direct rollover. So regarding the tax reporting overview, Fidelity will issue the Form 1099-R showing a direct rollover, which is non-taxable. The solo 401k plan reports receipt internally. So the funds go directly into the solo 401k, same thing with the equities, and they're held inside the new non-prototype investment-only brokerage accounts for the solo 401k, so there are no income taxes due, no early withdrawal penalties. So your Form 1099-R is going to reflect that it was a direct rollover. So Fidelity Investments is the one that will issue that Form 1099-R for the IRA. They'll issue that Form 1099-R next year, typically in January, early February. They'll mail a copy to you and a copy to the IRS. When you receive that Form 1099-R from Fidelity, you're going to want to review and make sure it has the letter G as in George listed in box 7. The letter G is the code used by the IRS on that Form 1099-R to denote that it's a non-taxable direct rollover from an IRA to a solo 401k. So while it's reportable, it's not taxable. Okay. Let's talk about, did we skip a slide here? So we talked about tax reporting there. Now, let's talk about why this strategy is popular. That is transferring your IRA at Fidelity Investments to the solo 401k. So when you transfer an IRA to the solo 401k plan, it's going to clear the way for your annual backdoor Roth IRA contribution. Remember how we talked about earlier how you can perform a backdoor Roth IRA where you make a non-deductible IRA contribution and then convert it to the Roth IRA? Well, if you have other IRAs, that's going to muddy up the waters regarding processing a backdoor Roth IRA because it's subject to the pro rata rules. So that's why clients will oftentimes transfer their traditional IRAs and any gains inside a non-deductible IRA to the pre-tax solo 401k so that they can isolate their non-deductible IRA funds to perform that what's referred to as a backdoor Roth IRA. And you're also going to be able to process the mega backdoor Roth solo 401k strategy in the solo 401k. Also, by transferring your IRAs to the solo 401k, all your retirement funds can be centralized under the solo 401k plan, so consolidated. And you're going to be able to keep your current equity positions in that IRA because they get moved over internally to the solo 401k. So you can avoid any taxes or market timing or disruption, stock market timing, that is. So when it's done correctly, moving your IRA to the solo 401k is one of the cleanest and most efficient retirement planning moves available to self-employed individuals. Now, with my solo 401k financial, we do more than just provide solo 401k plan documents. We actually design solo 401k plans for the maximum flexibility under the regulation. We also make sure it's drafted with the $1,500 auto contribution credit, where you can open a solo 401k plan and the government will subsidize the cost of having a solo 401k plan for many years to come through that $1,500 auto contribution credit. We'll touch more on that in a moment. Also, we'll help you with transferring IRAs, former employer plans, existing solo 401k plans to the solo 401k offered by my solo 401k financial. We'll take care of the ongoing compliance reporting, such as Form 1099-R, Form 5500 Easy reporting. You just need to make sure you request those forms timely because we don't have access to your funds. So you need to communicate with us. And we'll provide ongoing support regarding contributions, conversions, reporting, and so forth. All right, so I don't see any questions at the moment here. Any other questions? So let's just talk here about the auto contribution credit, and we'll wrap up for now, but we'll be back again here in a couple hours. So the auto contribution credit first became available, and we were actually the first solo 401k plan provider in the industry to offer it, starting in the middle of December of 2023 and after. So if you open a solo 401k plan with my solo 401k financial around the middle of December of 2023 and after, then we've already drafted your plan with the auto contribution credit, and new plans will also be drafted with the auto contribution credit. Also, if you're an existing client of my solo 401k financial and opened the solo 401k plan with us prior to the auto contribution credit being available, so prior to the middle of December of 2023, then we can update your existing plan so that you now qualify for the auto contribution credit starting here in 2026. Not all solo 401k plan providers offer it. For example, Fidelity Investments doesn't offer it, Schwab doesn't, T. Rowe Price doesn't, I don't think Ascensus offers it. But my solo 401k financials plan does have it built into it. Again, we were the first ones in the industry to offer it. And it's a $1,500 dollar for dollar credit. So it reduces your taxable business income on a dollar for dollar basis. So again, with this auto contribution tax credit, the cost of opening and maintaining the solo 401k plan for many years is practically free. And once we add the auto contribution credit to your plan, you're not required to contribute. You can opt out of contributing a minimum of 3%, and you can still contribute all the way up to the overall limit for the year. Or you can choose to not contribute. So whether you contribute or you do not contribute, you still qualify for the auto contribution credit. So we can amend the plan or add that credit to new plans. You're going to file Form 8881 a total of 3 times over a 3-year period, once each year. That's a total of $1,500. It has to be spread out over 3 years in $500 increments. So $500 for 2026, $500 for 2027, and a final $500 amount for 2028 for a total of $1,500. You would file Form 8881 each year. We have a PowerPoint and a video walkthrough on how to prepare and file that Form 8881. Here's a question here. We recently converted my wife's solo 401k to a traditional IRA. I believe this balance can be rolled into a traditional solo 401k without impacting the 2026 contribution limits. Would you assess with the rollover after opening the solo 401k accounts at Fidelity? What documents need to be filed with the IRS instead of my solo 401k? File these documents. So interesting enough, that's what today's topic was how to transfer an IRA at Fidelity Investments to a solo 401k offered by my solo 401k financial. So this webinar is being recorded, so you'll be able to access it through our YouTube channel. But in short, we'll go ahead and prepare the internal IRA transfer form so that all the equities and cash are transferred internally to the solo 401k plan. That's all covered in our setup. All right, looks like we've come to the end of our session. We've been on for almost an hour here. So that's it for today. Thank you so much for investing your time with us. Your time is valuable, and your solo 401k retirement future is worth it. If you haven't yet, please like and subscribe so that we can keep building this community. We'll be back here again this afternoon with some more crucial content. Until then, have a good rest of the day.